Let's be real. If you owned Apple, Microsoft, or Nvidia stock in the last 10 years, you were basically printing out money. And even if you didn't own these stocks, they were basically carrying the market for everyone else. But in 2025, it seems like they're hitting a wall. Big tech is no longer carrying the market for everybody else. And in fact, it's starting to look like money is moving out of Silicon Valley and moving back towards Wall Street. So today, let's talk about why tech is slowing down, why financials are stepping up, and what this shift could mean for your money. But before we start, I want to hear from you. So sound off in the comments if you own any of the stocks mentioned in this video, or if you've ever sold them in the last couple of years. But let's get started. Here's the problem. The market leaned way too heavy on a small handful of companies. The so-called Magnificent Seven, which featured tech giants like Microsoft, Apple, Nvidia, and Tesla, made up almost half of the S&P 500's growth in 2024. Think about that. A market which features the 500 largest companies in the US was pretty much carried by only 7 of them. But in 2025, that shine seems to be fading. Apple's growth is starting to slow down, Tesla stock is stumbling, and as a whole, the group doesn't seem as unstoppable as they used to be. But why is that? First, the stock price of these companies have just gotten way too expensive. Second, the hype over AI is starting to cool down now that we've pretty much adopted it into our daily lives. And third, the profit from these companies just aren't growing as much as they used to. In fact, a Goldman Sachs strategist actually said that the gap between big tech and the rest of the market will be the smallest that it's been in the last 6 years. Translation, money's looking for a new home. So where does it all go? Well, for the first time in years, money is flowing into sectors that people often ignored, and 2 of the biggest winners have been banks and fintech. Now, be honest with me, when was the last time you actually thought about a bank stock? Probably never, and honestly, I don't blame you for that. But this is where money is going. Why? Simple. They do well when we have a strong economy, when businesses are growing, and when deals are being made. And unlike the last decade of near zero interest rates, pandemics, and massive inflation, today's setup actually gives them room to profit. And the best investment you can make is subscribing to this channel. So do me a favor, hit that button if you find value in this video. So here's what's happening. Right now, US banks are sitting on hundreds of billions of dollars of extra cash. To put that in perspective, that's like if you, me, and every other American family magically found $3,000 underneath our mattress. And on top of that, regulators can unlock an additional $180 billion on top of that. This is money that can go into funding loans, buyouts, or putting money back in shareholders' pockets. Meanwhile, disruptors in the fintech space are starting to make some noise. For example, SoFi started out as a student loan app but has quickly grown into a one-stop financial hub. Meanwhile, Lemonade is starting to get millennial and Gen Z customers with an insurance app that feels more like TikTok and less like boring paperwork. And here's the kicker. Fintech companies are growing way faster than traditional banks. But don't get it twisted because it's still a giant roller coaster. One minute you can see SoFi going straight up to the moon, and the next minute Lemonade can come crashing down. That's just what you're signing up for when you get on this ride. But of course, there's gonna be a catch. All of this isn't risk-free. As a matter of fact, banks live and die with the economy. So if things start to slow down, they're the first ones that feel the pain. And while interest rates have been pretty steady over the last couple of years, if they swing too far in either direction, profits can get squeezed pretty hard. And that's not even including things like regulation, competition, cyber attacks. Wall Street isn't necessarily known for being the most drama-free. So yeah, financials look strong right now, but here's the truth. You need to realistically ask yourself how much risk you're willing to take when you invest in these kinds of markets. Because if you bet on banks and we go into a recession, your portfolio falls right along with them. For almost 10 years, big tech has pretty much been the one and only play. But in 2025 and 2026, things are starting to shape up a bit differently. So if you made it this far in the video, here's my personal take. I'm not selling any of my tech stock at all. But at the same time, I'm also not going all in on tech either. And that's because diversification is probably more important than ever nowadays. And this is something that I highly encourage you to do as well. Spread your money across everything from stocks, bonds, real estate, and even some cash. Because the truth is, none of us really know how all this is gonna play out. But if the last 10 years have taught us anything, it's this. The leaders of yesterday may not always be the leaders of tomorrow. So what do you think? Is the tech boom finally over? Are financials the way to go? Let me know in the comments below. And don't forget to smash that like button and subscribe if you haven't already, and I'll see you guys in the next video.